What the FOMC decision means now for the dollar and its peers. So last night, the Central Bank of the United States, the FOMC, kept rates unchanged. Okay, that was as expected, near zero. And Jerome Powell reconfirming, the Fed's willingness to act with its tools. They've pledged a minimum of $80 billion per month of QE and an additional $40 billion per month of MBS, so mortgage-backed security purchases. So that's a total of $120 billion minimum that they're going to be injecting into the economy every single month, so flooding the markets with dollars, so people, borrow and spend and continue to try and stimulate the economy and cushion the blow from obviously the effect that we've had with coronavirus. And the tone, as I say, was very much dovish. His outlook was bleak on the economy. They forecasted their worst ever projections for growth of this year, contraction of some 6.5%. And he's saying, don't get too excited basically about the latest NFP number that we had. You can't put all of your hope into just one number, essentially. So really downplaying that data as well. So it was really dovish, dollar negative. Hence why initially we saw the dollar's peers in the likes of Euro, AUD, NZD, CAD, GBP, everything aside from dollar were gaining initially. We're gaining serious ground. Obviously conditions were very, very choppy, volatile at least. Volatile, I should say, sensitive. Just quickly as well, a real beneficiary of this dovish tone was gold, precious metal gold. Gold thrives in conditions where, economies or central banks are continuing to pump into the economy, where rates are being pledged low. And that's another thing, the FOMC pledging rates, low at least until some 2022. Okay, so gold loving that and pushing nicely to the upside, a real beneficiary of that. However, as we headed towards Asia, we started to see the dollar bounce, staging a bit of a rebound, and the dollar's peers, the riskier FX, the riskier assets as well, stock indices coming back down. Now, why is that? I believe speaking to some of my contacts and just digesting it, it could be a little bit of disappointment, as we covered to our members this morning. It was a little bit of disappointment that, in terms of that they didn't deploy more, okay? They didn't act more. They met with expectations, okay, what they're going to be doing as a minimum, but they could have done more. There was talk that they could have done this yield curve control, and essentially that's them, intervening into the bond market, into the bond yields to try and keep borrowing costs low, okay? Low. They want to keep those low so that people are more inclined to continue to borrow, spend, try and stimulate the economy. But they didn't deploy that. So I think that's a little disappointment for US stock indices as well. Remember, stocks benefit when there's more of a dovish tone, more stimulus to go around, essentially, these sort of measures, these action being taken. So stocks came off and the riskier FX came off as well. But for me, just to bring everything back in, I said it this week, and I think I mentioned in the blog earlier this week, is about, look, it's only right that we see a pullback, okay? We've had weeks of riskier assets pumping. It only makes sense to just see a little bit of consolidation in this period that we're having at the moment this week. A little bit choppy, bit of consolidation, clearing out some of the mess, some of the retail market, etc., getting some better prices to then drive further to the upside with some of these riskier FX currencies, okay? Some of the stuff that we're looking at. And one last thing that's a real dollar negative in my view as well is, the deflationary territory at the moment in the US. Prices are falling. There's clear signs of deflation across a number of factors and areas in the United States. Remember, if we've got deflation, okay, where prices are falling, right, then how do we counter that? We have to be more dovish as a central bank. We have to continue to pump. And that's what the FOMC are doing. Keep rates low. So people spend. Try and get these prices of the goods and services back up, okay? Guys, in terms of all of this, you see how I'm just reeling this like second nature. It's almost just like a language, okay? And it just comes out fluently. Fundamentals, okay? I've got a course and I teach. It's so much value in there. It's ridiculous, right? For what it is. Check it out. Go on freaknetwork.io, click on our courses and just see what it's about. And I'm sure you won't be disappointed. So just to think the way in which I do. And in terms of the setups, we tie this all in every day with our service, freaknetwork.io. So not hesitate to become a member. Stay lit. Let's get it.